Hi everyone, this is Pete here. So today we're going to talk about the market crash yesterday that's due to the latest US CPI number. Now, is this going to be a resuming of the bear market, or is this just a little hump along the bull market? Let's have a look. So what happened yesterday, right? So yesterday we had the CPI results and the market absolutely tanked. Okay, so over here you can see that we have the S&P 500 drop about 4%, right? The Nasdaq dropped about 5.5%, and Dow Jones, even the most stable one, dropped close to 4%, right? It does seem like we are going back to a bear market. Now, before we come to a conclusion, let's take a look at what exactly happened to the CPI. What happened to the CPI yesterday? So this is the CPI 1-month change, right, that was released yesterday for August. Now, for those of you who are not aware what CPI is, basically it's a consumer price index that measures roughly the inflation of the prices that consumers have to pay. And what came out was that the CPI number was 8.3%, and it is 0.1% higher than July. Now, the expectation was actually for CPI to contract instead of expanding, right? They wanted to see that the CPI contract, and the expectations was 8.1%. So there was a difference of 0.2%, and this was the main reason why the market reacted like it did. Now, other than the CPI raising by 0.1%, another thing that was worrying was the core CPI that went up 6.3% year on year, right? And now what is core CPI? Core CPI is when you strip away the food, the energy, and these two are the most volatile, right? So core CPI basically measures the rest, which is supposed to be more stable, and yet we see that the inflation is continue to be high in this case. So what would the Fed do? I think the Fed is absolutely going to use this inflation as an excuse to raise the interest rate further. Now, you have already seen them raise the interest rate a ton, right, last year. And right now, I think they have the very reason that they need to increase it by another 0.75%. The thing is this, we must understand why is the Federal Reserve doing this? What happens when the Federal Reserve raises rates? Now, this is in theory what's going to happen when the Federal Reserve increases rate. Now, when the rates are higher, it will naturally reduce the demand for goods because it's just more expensive for people to produce goods. And with a lesser demand, then naturally the business activity will start to drop. Okay, now with reduced business activity, what we will see is that businesses will start to let go their employee, causing employment to go up, and naturally with less demand, right, wages will naturally come down. And hopefully with lower wages and you and I having less money in the pocket, we will be less likely to spend or bid up prices, and that should bring the overall prices down. And at least this is the theory. So in general, it does sound like inflation is a very bad thing.
Run away, Simba. Run away and never return.
I would say overall, is inflation good? I think it's at least better than the other opposite, which is deflation, right? Now, what is deflation? Deflation is basically with the cost of goods starting to drop, right? Now, you might think that, hey, isn't deflation a great thing? With the cost of goods dropping means things are getting cheaper. Yes, I definitely so in the short term, but in the long term, if everyone knows that deflation brings the prices down gradually, everyone will hold off spending. Everyone will not spend now because you know that the washing machine or the holiday they're going to do in 1 month's time is going to get even cheaper in 3 months' time. Now, consumer consumption made out the bulk of the economy over here. So if everyone holds off their spending, what's going to happen? It's going to lead to an economic contraction. Okay? So, Pete, it seems like deflation is bad, so is inflation necessarily good? I think there are in mainly two scenarios that inflation will be good for you. Firstly is if you own a home. Why? Because if you own a home, the cost of building your house again or building a new house that's exactly like yours is going to be much higher. Okay, so think about it. Let's say your house is, you paid $1 million for it. And right now with inflation, the cost of replacing the exact same house to build a new one is going to cost $2 million. So guess what? Now your house is not just worth 1 million. Now, probably not 2 million immediately because that is a new house, but your house is definitely going to be closer to the 2 million mark than its original price of 1 million simply because the cost of building has gone up. So that's the first benefit. Now, as a second benefit, if you're a homeowner, is that with inflation, your debt is going to be lowered. Now, what do I mean by that? Is that all mortgages in Singapore, right, or in any parts of the world, you're going to have a term to pay off for it, maybe 20 years, 30 years, right, that you can choose. So the thing is, as inflation increases, yes, the cost of goods will start to go up, but that also means that businesses may start to have a bit more money, right, and the wages will naturally go up as well, right? But your debt remains relatively constant, right? So let's say if you borrow $1 million, right, and for example, your mortgage per month is around $5,000 and you're making $100,000 a year, okay? And let's say inflation doubled, right, and it increased your salary to $200,000. Now, what is your mortgage going to be right now? Okay, it is likely going to be still about $5,000. Yes, the interest rate may vary a little bit, but it is not going to double your mortgage payment. So you are still paying the same mortgage on now a 200,000 salary versus previously a 100,000 salaries. So even though, yes, your cost of living has gone up, but the principal payment to your property remains the same. So actually inflation is good if you are an asset owner, especially in this case, if you own a property. Okay, so I think at this point in time, some of you might be thinking, Pete, so what's going on? Is inflation good or bad? Now, guys, I do not look at inflation as a bad thing or a good thing, right? I just look at it as it is, right? And I make my decision based on that when I invest. Now, I want to stay upfront that I know that inflation is going to hurt the middle income and the lower income very poorly, but if you look at it from an investment angle, okay? If you look at it from an investment angle, historically, whenever we have high inflation in the past, after it leads to a recession, it is very good for the stock market, right? So you can take a look over here. The dotted line here are the various inflation numbers, right? Tracked across the years since 1928. And the blue bar is the stock market returns, okay? So you can see that, yes, inflation, some parts of the inflation are really, really high, especially in the 1970s, right? But you can see that even in those years, the stock market returns are pretty good, okay? So it doesn't mean that high inflation will bring poor market. In fact, if the high inflation and the Federal Reserve increase the interest rate and cause the market to really contract, that is generally good for the market going forward. Why? Because it helps to reset the market. It helps to remove all the speculations, okay? So that the bull market can come back again. So is the CPI number of 8.3% necessarily a bad thing that will really cause the whole market to tank and be very bad for investors? Now, I think it depends on your time horizon. If you're just investing for the next year, then I think maybe this is bad news for you because the market does take a while to weed out all the speculations before it can run up again. But if you look at it from a long-term perspective, and guys, we are generally have a long-term over here, right, in my channel here, is that if you look back in history, right, at all the bear markets versus all the bull market, you can see that every time, whenever we have a bear market, it is actually a very good opportunity, right? After a massive crash, we do see a very sustained run-up, a crash, sustained run-up, so on and so forth. So you can see that overall, right, bad times, recession are actually the most opportunistic times for investors if you can take advantages of it. So one thing that is slightly better is that the small business owners are getting more optimistic, right? So this also came out at the same time as the CPI, where they poll the small business owners to ask them how they feel, and actually their sentiment is a lot better than the previous month. Now, one thing that the small business owners, and when I talk to a lot of the HR people they are hiring, is that right now they are facing a talent shortage, right? So in year 2020, over 84% of the businesses feels that they cannot find the right talent, right, to fill in the jobs. And these are the top 5 roles and the top 5 soft skill, right? Businesses are finding it hard to hire. They are looking out for talent. And so one of the key things I would encourage everyone out there to do is to make yourself, right, a talent, right? Improve your talent stack for the job, okay? So what you should be doing now is these 4 things, right? Is that you should be saving more money, right? Stack up your cash pile. When the market really corrects further, you can actually enter the market. The next thing is, of course, in order to do that, please live well within your means. Okay, this will help you to save more money, and also if you happen to, go into unemployment, should it happen to you, right? you will feel very safe and you can sleep well at night. Now, the third thing is I would say that to everyone right now, if let's say you are unemployed, you got retrenched, take this positively, use this as an opportunity to add to your talent stack, right? Go and learn the skill set that I just mentioned that can help you to be more in demand, right? These are the top 5 roles, these are the top 5 soft skills. Attend courses, get qualification, add to your talent stack. And last but not least, I think everyone can do this is if you are entrepreneurial enough, you can start a side business, and who knows that this side business may be able to replace your active income. Okay? So with that said, what is Pete doing right now in terms of investment, right? I'm holding on to my long-term portfolio and not touching it much, right? I just want to hold on to it for a ride. It's just like going through a roller coaster. There will be a lot of scary moments, but you know that at the end of the roller coaster, you will come out okay. Now, the next thing is that I'm ready more cash to deploy into great businesses. I'm trying my best to save as much as I can, even though with 2 children is not the easiest thing to do, but I want to encourage everyone out there to do the same. And thirdly, I'm taking opportunistic trades using options, okay? But I must caveat that, guys, only do this if you know what you are doing, or for those of you who have attended the OMI class that we conduct on a monthly basis, if you understand how to use options to take opportunity like this, right, then this is great for you, okay? So I know the CPI numbers came out and the market reacted violently, but guys, if you are a long-term investor and you look at the market for what it is, this could be an excellent opportunity for you, okay? So I hope you all find this very useful. If you like this channel, like the content, give it a like and subscribe, and I'll see you next time. Bye-bye.